All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is Monday the 10th. So we had a little bit of almost a double reversal day, I would call it. And I'll go over the charts and why I would call it that. But let's start with, so I mentioned last week I want to start doing, basically talking about 5 or 6 index charts as well as 5 or 6 stock specifics or individual names, I should say. So the first thing I want to start with, so I'm going to continue with this model for a little bit, but I'm going to start with small caps and IWM. So IWM has been the weakest of the indices in the U.S. Right? I look at the Dow, I look at S&P, Qs. I'll look at mid caps a little bit too, but small caps really kind of has been leading this move all along, right? And we did take out the October lows. I saw a lot of people who were saying, well, maybe if SPY holds, the October, November lows, everything's fine. I'm not really in that camp because a lot of stocks have already taken out the lows. So we have another hammer bar. This one looks a little bit better than what we saw on Thursday. Remember Thursday, we did we had a nice reversal to the upside. And then Friday, we completely, had more sellers come in on Jobs Friday, and we ended up taking out the lows. So we're kind of back to where we are. So we did have a hammer bar. If we cannot hold this, I think I mentioned this in the midday video, I would watch this 136 level. But there's a couple of things that I think people are noticing. There's a little bit of divergence when you look at the index charts. So for example, IWM had made a new low from October, but the relative strength index did not. So some people look at that and they say, hey, that's a divergence. That's a positive. I would kind of maybe err on that side, and we'll see what we could do tomorrow. Going back to the S&P chart, so I think those are good things. A hammer bar in the IWM, some divergence using that RSI indicator. The issue, of course, is one day is not a trend. The way that we've been moving on a day-to-day basis, I really wouldn't hang my hat on any of this. I would like to see a little bit more follow through. I didn't really go home with a lot of, wearing a lot of positions. I've been pretty much in the camp of thinking, hey, this is a great day traders market. I made some money on both sides of the Qs today. I was short. I made just a little bit of money on that. I actually gave back because I didn't sell right at the lows of the day. But then I made some money. I kind of switched around, and that's all. I'll go back to the Qs in a minute just to review that trade. But S&P. Same thing. We went lower here, and you could see that we did not make a new low on the relative strength index, which again is some divergence, right? That's called divergence. So, we actually finished up on the day. Looking at today's price action. Oh, you know what? I did not even get to the Qs yet. So I talked about IWM, but crazy market action, right? A lot of people were. I saw on Twitter tweeting out futures levels for after futures opened last night. They went down about 1%. And then we did this crazy rally, right around 8:30 in the morning. And then basically gave it all back and and went lower. So it's, I really, unless you're trading futures, which I don't trade futures anymore. I'm just not in that game of trading futures on Sunday night. I like to relax on Sunday night and watch football, and do some chart studies. But yeah, I mean, it's, if you're doing this, if you're spending time and energy tweeting out futures, I mean, a lot of times you have this where we were actually flat or actually up a little bit. It's kind of, I don't know. I think it's a waste of time to be watching all night, Sunday night, what these things do. Again, unless you're actually trading. Other than that, I think it's just a waste. It's an outright waste of time. Again, I would rather spend time with family and friends and watch some football. But be that as it may, so this was the price action. We did go lower again. Just to kind of tell you what we saw this morning, it was a ton of put buying. You could see I actually have a lot of trades in here. There's a lot of this SQQQ, which is triple levered Qs short. So they were buying calls. That was the best call order that I saw all morning long. But it looks like this kind of got exhausted. Is my take anyway. That the put call ratio really went intraday pretty high, meaning there's a lot more puts being being bought, because if we go back to this list, you could see that there was a lot on here, and this is basically covers, I would say, right into this J and K order. Maybe this, probably all of this was all in the first half hour. I'm sorry, first half of the day, which you probably saw me go over that in the midday video. And then we saw some call buyers, finally come in. So it could be a little bit of seller exhaustion. It's also, I think, if you watch this move in the Qs, which is basically what. I got long on the move once we got into value, and then I could use that as my stop. If we go to the 1 hour bar, but we basically went all the way through one side of the value area in the Qs or NASDAQ futures. Also notice that we are back in value. We took out this VPOC this morning. That should have been my area to kind of cover my short in the Qs, but I was a little bit stubborn with it and said, hey, well, we'll see what happens. And then I added, once I substituted out of the Q's puts, I went into Q's calls and made some money on that. And let me just switch this. I actually took my last target. I didn't like this bar around 3 o'clock today, which is this one. It was a kind of a funky looking bar. We went higher and then we went lower, so I just bailed on this bar in here. But we actually went back to the highs and went what's called the 80% rule all the way through the value area in the Q. So that was a nice little trade. So a couple other areas. So I think that was pretty positive to see that happen in the reversal. Just a few other areas that I'll talk about the strength and then I'll talk about the weakness. But I thought the semiconductors were also, again, there wasn't a major rip to the upside with the semiconductors, but they just kind of hung in there all day long. They only got to the bottom of value where the weakest was. By the way, this was the European close, which I think is something to continue to watch because Europe is really getting smoked. And you could see what the DAX is doing. If I zoom in here, this is a 2-year chart just to kind of give you some perspective. But, this is closing on the lows. And we've seen this now a few days in a row. So it's becoming more of a worry, right? This was the October November low, and it's going down pretty hard here. So it's the second time that we've seen this where once Europe is closed, it becomes a little bit of relief, and we saw that relief rally. They started talking up Apple on CNBC, and I think some shorts kind of covered a little bit. I don't think people really, with shorts you really have to, if you're day trading and you hear some positive news about somebody buying Apple calls, even though if it's right or wrong, you kind of want to get out of your short, which I think is also what we saw a little bit today too. So that's kind of where I am for the day, playing a nice move in the Qs, but did I really add a lot of positions today? No. I don't think one day is a trend, and I want to see more things. I do think that it's just kind of pulling right now, even though that the semis had a nice day. It seems to be just a little bit of pulling teeth to get a move to the upside. You could see, by the way, from a technical basis here in SMH, which I think is one area to watch, we are still going on the down days much easier and much faster to the downside versus what we saw today, which was just like a small grind higher. So I think you just kind of have to take this, as I've been saying almost every day in these videos, just take it one day at a time. I don't think that we are going to see right now just one day and this volatility is going to be over with. I think it's just going to be a process. So that's SMH. One other positive I would say, if you look at some cyber names, I thought they also had the strength in the morning, and then they came back. So I'm watching names like FTNT in this space. Actually, did not have a bad close here. Maybe we draw a little trend line in here for now. Whoops, that didn't take. But that's a name in the cyberspace. I've seen the cyberspace a couple times try to rally, and then of course there's a rug pull in the market, and they kind of get lost in the shuffle. But they've been trying to rally this group, so I'm going to keep my eye on that for the next couple of days. Talk about single stocks, and then well, actually, I love to. I don't know why I love to do this, but I will talk about, which I think is good to do. CNBC is talking about I don't know what they're talking about. They were talking about mutual fund redemptions and about how there's double selling going on or riding on the coattails of selling. I don't think that they know what they're talking about, so I wanted to talk about it for a minute. Let me talk about the single stocks first, but I'm happy to kind of go over with you what a redemption is and what a creation is in ETFs. There's not double selling. These guys don't. I don't know where they get their information from, but in any event, let me just talk about Apple for a minute. I think Apple contributed to the weakness. Like I said, futures were up, going into the open. But, there were some reports about Apple, and Apple went down pretty hard. This was the CNBC. There was also a story about them in China and iPhone ban and possibly getting that that situation fixed. But you could see, a nice, I don't know if would call it a short covering rally, but from there on in, it just was a kind of a grinder of a day. Same thing with Amazon. I was watching Amazon a lot today and just could not get going, right? I mean, it got into value for the day, which is a positive. The just momentum is not there. And, I was saying, hey, maybe if this can get out above this, we got over the 200 period moving average in here, maybe this thing pops and fills and gets all the way through to the end of value, but through the upside of value, but it just did not have any momentum to it. Still up 0.75%, but just the down moves that we're seeing right now just have that momentum to them. The upside is, like I've been saying, kind of pulling teeth. One other name to kind of note that I've been watching was PayPal. I'll also talk a little bit about Facebook. But PayPal, if we go to the daily chart, I like to see names go outside of value too, which is what we have in PayPal on that 5 minute. So it's been holding. I sent out a tweet earlier talking about where there's strength in tech, big land tech. PayPal is one of those names that's on my radar. Where I was talking about Microsoft, Cisco, and Visa. Start with Visa just to see. No momentum in Visa, kind of looking like not exactly an inside day, but just kind of felt like it. It did get above the close here and in value, so I would need to see more from Visa, but it has not broken. It still has not broken down. We had 1 or 2 days below the 200-day moving average, and that was it. If we go over to Microsoft. Microsoft had a nice day. It was actually up 2.6%, so a real nice day for Microsoft. And again, staying above the 200-day moving average. Cisco is the other one that seems to have good strength to it. This one was up 90 basis points. Wow, but that Microsoft, I'm surprised, was up that much. Clearly, I did not trade that one today. And then finally, Facebook, which announced that buyback plan. It does look like Facebook is trying to put in a bottom at this point. There was a little bit more call buying in that name today, and that from a single stock standpoint, there really was not that much call buying. A little bit of Apple here and there, like I said, a little bit of Facebook, and then just some smaller orders. GLUU, I wouldn't even bring up the chart, not big enough of an order. There was a little bit of Clovis on another deal. So a little bit of dip buying and things like RF, but these are small orders. All right, so that is the recap. Yeah, so I'm happy to go over this. It's the video is now 13 minutes long, but my main message for the end of the day is just kind of take this one day at a time. I think there's great day trading setups and opportunities, but I'm still, really trimmed down my positions over the last couple weeks and sitting with a very small trading account right now, trading account position wise, so that I can kind of get in and out of positions and not worry about what I've got on. All right, so that's my standpoint. Yeah, so I'll go through this. So let me just talk for a minute about. Let's see. Right, here's a little diagram that I just put up. So CNBC talked about. I don't know what they're talking about, double selling and about riding the coattails of index redemptions. This is how it works, guys. There's not double selling. When a hedge fund has a large order in an ETF, whether it's SPY, whether it's XLF, whether it's XLK, if it's a large order, right? What they'll do is they'll call their broker, the hedge fund, and they'll say, hey, make me a market. I want to sell 1 million shares of SPY. And the broker will go ahead, and to facilitate that order, what they'll do is once they get that order from the hedge fund, they agree upon a price. They what they'll do to source the liquidity is sell the underlying basket of the SPY. Again, it's just, this has been going on. This is how a market maker in an ETF. This is what I used to do. How you make a market in SPY or in a ETF. So, if you ever look at the volume of an ETF and you say, oh, it only trades 30,000 shares a day, it's all about the liquidity of the basket, because a market maker will go ahead and source that liquidity. So what happens is, the hedge fund is long. They will sell to the broker. So then the broker will take the long position of SPY. They make them a market. And what they do is they sell their hedge, because they don't want to take possession of 1 million shares, and they don't want to go out in the market and sell 1 million shares of SPY, because that will move the market. Not so much with SPY, but if you're looking at, let's say, XLY or a sector ETF, they'll not only will sell the ETF, but they'll sell the underlying shares. Again, so this way they don't disrupt the market. Now what happens is, let's say that they decide to sell the shares versus the SPY, right? So they're sitting long in the right increments, the S&P 500 underlying basket, and they're long SPY, right? So they're hedged, right? That short basket versus that long position of SPY is 1-for-1. Then what they'll do is they will call up, so the broker will call up, in this case, State Street, and they'll say, I need to call in a redemption. Let's say it's a 1 million share order that the hedge fund unloaded, right? And the broker did this transaction, so they sold in the market. They facilitated the order by selling the underlying basket. So now they're sitting long SPY, short the underlying index. They'll call State Street and say, hey, I need to do a redemption for 1 million shares. So what they'll do is they'll deliver the 1 million shares of SPY to State Street, and State Street will deliver them the underlying shares in the basket, and that collapses the broker's position. Now the broker is whole, right? And what'll happen is you'll see the very next day, which you can track, and this is something that I report, you'll see a redemption, right? This is the outstanding shares of SPY. The outstanding shares of SPY will go down by 1 million shares. But there is no double selling. Again, I'm happy to talk to anybody at CNBC, but there's no double selling. Do people know that there's a big, so this goes back to like blaming algos because a hedge fund has to sell. The high frequency guys will try to sniff out when there's a big order like this and to try to front run this order, right? They'll do that in their own, you could call it algos, you could call it, their high frequency model. And they'll try to sell when they know that there's a very large order in the market. But that's not the cause of why the market is going down. Maybe it's a little bit of an exaggeration, but that's not the root cause of the issue. The root cause is the people are unwinding longs. And that's the issue. And I just wanted to illustrate this because this is what goes on in the market making world of ETFs. But it is not double selling. So anyway, that's that. And for the most part, algos are not to blame. It's guys in hedge funds who have to meet up with, they're getting redemptions right now. People are getting out of hedge funds. So it's not their fault that they have to sell some of their holdings. It's just, supply and demand. Some of the underlying, and same thing in a mutual fund. People get scared in a mutual fund or they want to get out of the market and they call up the mutual fund and say sell. At the end of the day, they have to do redeem. So it's just part of how the market works. I don't think blaming it on algos because every time there's a move to the downside is the way you want to think about how the market functions. All right, so that's the end of the video. Have a great day, guys, and I'll see you tomorrow.